Rapids with your market commentary for the final week of March 2013. Very, very significant day. It's end of the month, end of the quarter, and significant USDA stocks report out today along with planting intentions for 2013. Just a quick synopsis on the numbers. Prospective plantings on corn, 97.3 million acres. Right in line with what average trade guess was, and pretty much in line with a year ago. Did notice in the eastern corn belt you did see a decrease in corn plantings and an increase in bean plantings. The bean number at 77.1, actually a little lower than what the trade was anticipating. 78.5 is what the trade was looking for. This is also about in line with a year ago. Wheat plantings 56.4. This is versus 55.7 a year ago. I believe if you look at all crops combined, we're down about 1 million acres in the total crop acreage when you break down cotton and everything else. The big surprise or significant game changer in today's report was the stocks. Corn specifically, corn stocks as of March 1st, anticipated by the USDA, at 5.4 billion bushels. The trade was looking just for slightly over 5 billion bushel, and this is in comparison to the stocks a year ago at this time at a little over 6 billion bushel. But that roughly 400 million bushel increase, or I shouldn't say increase, but a number larger than what the trade was looking for, was very, very significant, thus seeing the change in the markets that we'll talk about here in a second. Soybeans at 1 billion bushel, right on the line for stocks. Trade was looking for somewhere more around 950, so we have about 50 million more bushels of beans than what the trade was anticipating as far as stocks. A year ago the bean stocks were 1.37. Wheat 1.23 billion bushels. A year ago 1.2, and so slightly bigger than a year ago, and a fair amount bigger than what the trade was looking for. They were looking for a 1.167. So net big increase in stocks, kind of shocking to some degree. It'll be interesting because we will not see the breakdown in an S&D of these numbers until the April 10th supply and demand report, which should give a little more clarification what we have as far as a carryout number, and also where these breakdowns are in regards to feed usage, in regards to ethanol, and also exports. Now keep in mind, higher prices are cured by higher prices, and I think if when we see the S&D next week, maybe that's reflected a little more in that report. There's no doubt we're seeing a decrease in feed usage, especially as we talk right now in the corn. A lot of that switching over to wheat because of the ratio. Ethanol demand has been down most of this year. It'll be interesting to see in the S&D where we sit with total ethanol production via corn for the crop year, because that seems to be a fairly liquid ramp up production, take it away depending on how margins are going. And as we know, exports are just pathetic, awful. That's where we're seeing our biggest decrease in demand this year because of the high prices. This looking forward to the June 30th stocks report, I think will be interesting again because of these stocks numbers. The prices today, even though the market was down the 40-cent limit, synthetically the market was trading in the May and the July, the old crop corn, roughly 20 cents additional lower. So come Monday morning, keep in mind no markets tomorrow because of Good Friday. Because of that, chances are we're going to see a lower open Sunday night on into Monday morning with that type of number variance. When you look at the board here of late, we've taken away on the new crop corn all the gains we've made in the last 30 days. We've taken that back away in one day. And the other thing that's very significant as far as the corn is concerned is we saw some huge weakening of the spreads. We've seen at or near record inversions in corn spreads here over the last couple months, especially in the upfront part of this market, the March, the May, and the July now that we're seeing. A lot of weakening in those spreads. Don't be surprised we see some weakening in those spreads in the early part of next week. And then once the market settles down, and depending on what the producer does as far as movement, they could have some gradual improvement in basis, and I think could bring the spreads back some. Not to the levels we've seen over the last 2-3 weeks, but it could bring the spreads back some. In regards to corn, and that's the key focus as you look down the road and you look at these stocks numbers, and again we'll have more clarity on the April S&D here in a couple weeks of where the potential carryout is for the 2013-2014 crop. USDA does not give us a balance sheet number on that until the May report, which is about 6 weeks away. But assuming that everything falls into place, crop ends up being, normal, decent, if you will, the assumption now is it's hard to have carryout for 2013 and 14, below 2 billion bushels. And that's a kind of a key number to keep in mind as we go down the road. Assuming that occurs, it's very conceivable to have corn with a 4 in front of it, whether it's a low 4 or high 4. That's to be of question. And also carryout on beans could easily be, in the 200 million bushel category and or higher. If that's the case, that's cheaper bean prices down the road too. So very significant report here. Puts a lot of bearish tone in the market as we get into the early part of growing season. Keep that in mind with some of your marketing thoughts, because as we go along, this is going to be interesting. A week ago, we had a meeting in Illinois with some commercials, and the general consensus there was the amount of new crop corn and beans to some degree that have been booked so far is at or below record pace. One commercial elevator even mentioned he's bought virtually no new crop corn since last summer. So producers have sold very little new crop corn at this point. That's something to keep in mind. It could be concerning as we go along because everybody's on one side of the boat. We also had a hog quarterly report today. All hog inventory up 1%. This is for the quarter. Breedings unchanged, and kept for marketing up 2%. But come Monday, the next time we have markets, it'll be interesting to see how the market's opening, especially on the grains. And I think 3 things as we go forward. 1, obviously we're going to still be digesting this stocks report next week, trying to figure out what it means. 2, plantings, not only from an intention standpoint, but what we're seeing on a localized state-to-state basis as far as planting as we get into the month of April. And lastly, weather. There's no doubt the month of March has been tough. We have alleviated a lot of the drought conditions, though, in the Midwest at the same time over the winter months. So as we go through the month of April, depending on how the weather looks, you could have some reaction to the market that way. If we start early April and it's kind of cool and or cool and wet in parts of the Midwest, it may delay some of this planting. But there's no doubt with this stocks number coming in as it did, the concern of having the availability of stocks in the late part of the marketing year is not as big a concern today as it was 24 hours ago. So 3 things looking forward: stocks, plantings, and obviously weather as we get into this time frame. Lastly, this is the end of the month, end of the quarter. Do we see money flow change as we get into the early part of next month, as we get into a new quarter? Not only from a commodity standpoint, but keep in mind the stock market is at or near record high as we speak on a daily basis. Does the money flow continue on with the equities? Finally, once again, no markets tomorrow for Good Friday. The markets will open up again Sunday night/Monday. And with that, we wish everyone a very happy Easter and hopefully the start of spring. Have a great weekend.